Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing some amount of recovery which has taken place for the market. So that seems to be the big headline today. We have the Nifty which is up around 32 odd points, the mid-cap index which is up around 0.4%, and the bank Nifty which is absolutely flattened out at this point in time. Lot of stock-specific action taking place. We have a lot of stocks to discuss, may it be from the fertilizer space to the entire pharmaceutical space, all of these stocks which are buzzing around. Joining us today, we have Astha Jain, Research Analyst at HEM Securities, and Ruchit Jain, Lead Research at 5paisa.com to answer all of your queries. Astha on the fundamentals, Ruchit on the technicals. Afternoon to both of y'all. Well, Ruchit, before we start off the queries, wanted your technical call on the markets. The mid caps are outperforming. It's been quite a good turnaround. The advanced decline ratio has worsened a tad bit after improving, but nonetheless, it's still in positive terrain.
Yeah, hi, very good afternoon, Ekta, very good afternoon. Well, if we look at the markets, then we did witness some negative opening today, but there was a good support of on the hourly chart around 23,350 to 400 zone, and exactly from that support we have managed to show a decent pullback move. So we expect that the up move should continue going ahead. 23,350 would now be seen as a very good support, and the kind of broader markets buying has been going on. I think we are poised to rally towards 23,900 to 24,000 quite soon. So the overall trend remains positive. So better to stay in the direction of the trend. Any dips from here on, in case if it comes again, that should be seen as a buying opportunity. So downside seems to be very limited, and still there are no signs of any kind of reversals on the charts.
Okay, all right. Well, let's get in some queries now. We have Samir Patel, who writes to us from Gujarat. He holds 20 shares of JSW Steel, which he's bought at around 900 odd rupees. He wants to know the future prospects of his investment. So that's the particular stock that we're starting with, JSW Steel. Samir has bought around 20 odd shares, so he's currently sitting on a bit of a profit. Well, Astha, let's start with you on this one. What would you recommend on JSW Steel? What are the future prospects?
Hi, good afternoon, Ekta. Talking about this counter, basically being the flagship company of the JSW Group, this company has shown improved financial performance, and going ahead, what we believe that on the basis of global steel demand surge as well as steel price surge, the company is going to gain. Apart from that, with the reduction in the coking coal cost also, the profitability as well as EBITDA per ton will going to increase for this company, and hence we are expecting this company to show improved financial performance. Recommending a hold on this counter with the price target of 1,020.
Okay, all right. Well, there's a positive call coming in, but on the technicals, what would you recommend, Ruchit, on JSW Steel?
Well, even I would recommend a hold on JSW Steel because the stock has been forming a high top, high bottom structure, which technically is a positive sign. And we have seen that any kind of price corrections which has recently came, we have not seen any kind of volume-based selling in the stock. So, which is again a positive sign if we consider some short to medium term. The reciprocal retracements of the recent correction indicates the short-term targets around 978, 980 first. And if that gets surpassed, then I think 1,027, 1,030 could also be seen. So better to keep a trading stop loss method and continue to hold the positions around 980. If it's a trading positions, then I would advise to take a review again.
Okay, all right. So that's on JSW Steel. That stock has done reasonably well. We now have Gurbinder Singh Bedi, who writes to us from Noida, holds 100 shares of Adani Ports, which is bought at 780, long-term investor, and wants to know what to do, whether to stay invested in Adani Ports, which is bought at around 780, sitting on a very good profit on that one. Ruchit, do you think that it's prudent to probably take some money off the table, or technically, how would you approach the stock?
I think the buying price is quite good. So he has a good margin of safety that in case if we see any short-term corrections, then also he can, there's nothing much to worry for him. Recently also, whenever we have seen correction, the stock has managed to hold above its 100-day exponential moving average, which is now placed around 1,300. So quite high above his buying price. So I think it's better to hold on and continue to ride this trend which is unfolding on the higher side. I would advise him to keep a revised stop loss of 1,300 now. So in case only if 1,300 gets breached on the stock from current levels, then he should look to book profits. Otherwise, since he's a bit of mid to long term investor, the trend is positive, and then so it would be wise to continue to holding the positions.
Okay, and fundamentally, what's your call on this particular counter, Astha?
So yes, we are also recommending hold on this counter with the price target of 1650. Talking about this counter, we all know that this company held 27% market share in the cargo volume terms that we talk about, and in fact 44% in the container cargo volume terms. So the company has strong market share, and we are expecting company to show strong volume growth, especially in the cargo front, of around 11% CAGR from FY24 to 26. The basis of that assumption is that what we believe, first of all, their logistic business is doing well. So keeping that apart, what we believe that company is going to show strong performance on the basis of the strong portfolio mix they have. In fact, they are also ramping up their operations. So I think all these will aid to the strong profitability going ahead, and we are expecting this company to show more cargo volume. So on the basis of that, we are positive on this counter, recommending a hold with a price target of 1650.
Okay, all right. 1650 is the price target on Adani Ports coming in. All right, so that's on Adani Ports. But we now have another query. This is from the financial space. Praveen Kumar writes to us from Kerala. Says he wants to buy some shares of IDFC First Bank for a period of 2 years. And he asks whether or not it will be a good bet. So currently, that's what his query is, whether or not he should actually purchase the stock or not. In that context, Asa, I think we've discussed IDFC First Bank before, but if you could just give us your sense in terms of whether it's a good call and, from a horizon of around 2 years, so maybe a long-term investor.
Yes, we are recommending this counter to our clients also with a buy view. And price target which we are setting at the initial level is around 92 to 95, but we are quite optimistic that it will gonna touch more than 100 in the rupee term going ahead also. So talking about this counter, yes, if we see the deposit growth, it has outpaced the industry because the deposit growth was very strong in the quarter gone by, and in fact they have shown the strong asset quality also because their GNP and NNPA ratios are now contained at below 2% level. So I think that is also a positive point. Going ahead also, we are expecting this counter to show strong volume, strong growth in their loan as well as in their deposits. So keeping all these things in mind, we are positive on this counter, recommending a hold with a price target of 92, but also we are recommending buy on this counter with a price target of more than 100 in the medium term.
Okay, all right. And technically, how would you approach the stock? It's not done much on a year-to-date basis, Ruchit, but what would your approach be, say, from a longer-term horizon? On a 5-year basis, it's done well, but this year it's pretty much been quite quiet.
Asa, certainly, last 9 to 10 months, the last 9 to 10 months have been a corrective phase for the stock, where the stock has corrected from its high of around 100. But if I look at the bit of long-term charts of weekly and monthly chart structure, then there is a high top, high bottom structure which is going on. So this correction of last 10 months just seemed to be a normal corrective phase within a longer-term uptrend. So the risk-reward ratio is definitely favorable to take fresh longs over here because the stock has now formed a good support base around 70. So even for a long-term horizon, if I take retracements of the recent correction and if this high top, high bottom structure continues, then it gives a potential targets of around 108 rupees for the stock. So with a stop loss below 70 for a target of 108, if you look at the risk reward ratio, then it is quite good over here. So I would recommend to buy at current levels if he can keep some patience for 2 years, as you mentioned, and expect the levels of 108 and keep a stop loss below 70 rupees on your positions.
Okay, all right. So that's on IDFC First Bank. We have Deepa, who writes to us from Pune, holds 400 shares of Manali Petroleum at 130.39. So sitting on a loss on that one, and wants to know what to do, whether she should book her losses or to stay invested in this particular counter. Ruchit, over to you on this one.
For now, I think it's better to continue hold for some more pullback move. The last 2 or 3 weeks, we have seen a good price up move supported by rising volumes. And retracements of this recent fall is coming around 110. So around 110, I think it should take a review again. But no, these are not the prices where losses should be booked. I think better to hold on and review it again around 108, 110.
Okay, all right. And what about you, Astha, the fundamentals for the stock?
So we don't track this counter, so cannot comment on that.
Okay, all right, fair enough. Anything within the space that you would recommend?
So ONGC, again, this counter is looking good to us. And what we believe that due to the increased production, this counter will going to see a strong surge going ahead also. So we are positive on this counter, recommending a buy as well as hold with the price target of around 290 to 300.
Okay, all right, fair enough. Well, on that note, we need to take a short break, but a lot more queries lined up. Stay tuned. Welcome back. Well, for the markets, like we've been pointing out, it's picked up a little bit of pace for the mid-cap index. It's up around 200 odd points, 0.4%. The advanced decline ratio is also positive. A lot of stocks which are buzzing around. So on the downside, do watch out for a couple of them, such as SAIL, which is down 3.5 odd percent. Jupiter Lifeline Hospitals is down around 3 odd percent. Giving it company is Alchem, which is under pressure as well. And a couple of other stocks which are seeing some amount of pressure include CEAT, which is down around 2 odd percent. That stock hasn't done too much this month. It's up only around 4% this month. It's up only around 1.7% this year and is a bit sluggish in today's trade as well. On the upside, watch out for MOIL, MMTC, GSK Pharma, Prestige Estates. All of these stocks are gaining anywhere between 3 to 5 odd percent, giving you a sense that it's really gains are really sector agnostic at this point in time, with gains coming in across the board for stocks. On the downside, in the Nifty space, IndusInd Bank and Cipla continue to be under pressure. So both those stocks are down anywhere over 2 odd percent respectively at this point in time. Let's get in another question now. We have Rajat Mishra, who writes to us from Kerala with an investment query. He's asking which stocks among KFin Tech, CDSL is fundamentally and technically good for investing. So it's to both of you all. Astha, let's start with you. What would your view be on both of them?
Both of them are looking good, but buying on dip strategy is advisable on both these counters because they have risen so much. Now, talking about of any one particular option, then I think CDSL is a better option. First of all, want to give the price target to CDSL, which is at around 2230 to 2300. Now, talking about this counter, because it is like one of the market leader in the duopolistic market, so having an edge over there with the increase in the number of accounts, as we all know, demat accounts are increasing day by day, retail participation is increasing day by day. CDSL is going to benefit a lot. And one important point about this company is that no further capex is required. So definitely their ROEs will going to expand further. So looking after all these, CDSL is a better option. So we are recommending buying on dip strategy. We are not advising right now to buy on this counter because we think because valuations are high, so some dip can come and those are the right point to enter into the stock. So buying on dips is advisable for CDSL with a price target of 2230 to 2300. In fact, KFin Technologies is also looking good because again, they are also one of the leaders in the MFRTA business. And the kind of, again, equity participation is going on. So both these counters are having their own advantages and disadvantages, but better is CDSL. In fact, if someone want to invest in KFin Technology, then also it is advisable with the price target of 775 to 800. But again, buying on dips strategy is recommended for this counter also.
Okay, all right. And technically, what would your call be on both these counters, Ruchit?
So although the longer term charts still remains positive for both these names, but I think in near term we should see either some time wise correction or a pullback move in both the names. Primarily because if I look at the weekly charts, then the recent higher high in prices has not been confirmed by a higher high in RSI, and in technical analysis we term this as a negative divergence. As such, divergences after a rally, whenever formed, they lead to either price-wise corrective phase or a time-wise corrective phase. So I think better to wait for some corrective phase of either of these before entering fresh longs. If we get any kind of dip towards 1700, 1750 in CDSL, then I think that would be good levels where the risk-reward ratio would turn favorable to take fresh longs.
Okay, all right. Well, that's the call coming on both these counters. We now have Gayatri, who writes to us from Jharkhand, holds 10 shares of ITC, which she's bought at around 300 odd rupees. She's sitting on a profit there and she's asking if she can buy more at these levels. Well, interesting question, Ruchit. Do you think that it's prudent to buy more at these levels? Could it probably touch 500 levels again for ITC?
I think yes, no. In case if there is a good time horizon, then these levels could be used to add more positions for your portfolio. So, we have seen a good price-wise correction initially from 480 to 400 kind of level, and what we are seeing right now is a time-wise correction that is going on. So, 400, 410 has been the support base which has formed in this recent corrective phase. So, downside price-wise seems to be very limited. There could be some time correction before resuming its uptrend, but if you're looking to add it to a portfolio for mid to long term, and I think these are good levels to from current levels to 410. These are good levels where you can consider buying ITC.
Okay, all right. And what about you, Astha, on ITC?
So we are recommending hold. Maybe buying on dip strategy can be applied to this counter as well, with a price target of 480, so very near to 500. But initially, we are setting the price target of 480. The kind of results company has given in this quarter, so paper and agri business are not showing strong performance, but the other business, which is FMCG especially and cigarette especially, they are really showing strong growth. Going ahead also on the basis of the new launches, we are thinking that company will going to show strong performance in their FMCG and other business due to the cost optimization, premiumization strategy, etc. And in fact, their hotel business will also perform well because they have a strong pipeline of properties coming. So on the basis of hotels business as well as FMCG and other business, we are positive on this counter, recommending a hold as well as buying on dips with a price target of 480.
Okay, all right. Well, we do have Lakshmi who now writes to us from Patna. She says she wants to invest in Vidanta and is asking if that would be a good decision to buy some shares right now. Well, Vidanta has been in the news, in the past couple of days. They're not only mulling their first dollar bond sale of around $500 million, but they also are, have denied any kind of stake sale rumors that were there. So, in all of the context of news, what would your view be, Astha, on Vidanta?
Yes, in fact, company is also looking to reduce their cost, and they are looking towards increasing operational efficiency and maximum power usage. So I think all these things are really contributing, to the strong financial performance in the future ahead. This is what we believe, and in fact, the demerger business is also what we are expecting will turn up by the end of calendar year 24. So on the basis of all these factors, we are positive on this counter, but we are recommending a hold on this counter with a price target of 505 at the initial levels.
Okay, all right. And Ruchit, what would you recommend on Vedanta?
I think the overall trend still remains quite positive. We have seen a price up moves were supported by good volumes and not seen any kind of high volume-based sell-off in this recent consolidation phase. But would recommend buying in a staggered manner where only some quantity should be bought at current levels of whatever quantity wants to buy, and keep some room to average in case if we get any kind of dip towards 420, 410 range. So there, that is where the positional supports are placed. So buy some quantity only at current levels, maybe 25 to 30% of whatever you want to initiate, with a room to average at lower levels.
Okay, all right, with a room to average at lower levels. We now have Rahul who writes to us from New Delhi, holds 10 shares of Zensar Technologies, which is bought at around 200, wants to know what to do, whether to stay invested or to exit at current levels. So good amount of, good entry price for Zensar Technologies, which Rahul has got, sitting on a profit as well, but the quantity is less. But nonetheless, what would you recommend? And Ruchit, and would you recommend maybe even adding on at these levels?
As of now, I would recommend only to hold on the existing positions. Its quantity is less, but the stock has already seen a decent run-up in the recent past, and a bit overbought momentums are there on the lower time frame. So I won't recommend adding on more over here, but in case if we get any kind of dip towards 680 levels in the near term, where the 20-day exponential moving averages are there, those would be the levels where you can consider buying more of these stocks. So overall trend remains quite positive, but no fresh buying should be done on any kind of dips towards 680, 700.
Okay, all right, Ruchit as well as Astha. On that note, we're going to have to wrap up on the show. Thanks very much for joining and taking us through all of those queries. Well, we leave the markets in a steady state, you'd have to say. The mid-cap index is gaining around 0.3%. The Nifty, the sensex, as well as the bank Nifty absolutely flat. But the big story of today has been the recovery that we've seen from intraday lows and the markets managing to maintain that X of any volatility. Well, it's a wrap, but do remember to email us your queries. We'll address them with our experts. Stay tuned. Closing bell up next.